I recently did a poll on our community tab page and I asked you guys, now that the market is at all-time highs, what is your strategy? Are you going to be buying more stock, selling more stock, or just continue holding your shares? So here are the results. You can see a majority of you are just holding your position, about 1/5 of you are still buying, and around 14% of you are selling. So I found this pretty interesting. I want to discuss some of this today, and I want to actually share with you what I'm personally doing with my portfolio. So looking at the S&P over the last few years, you can see it's really been on a steady incline for the most part, but since 2018, we have been experiencing some levels of volatility. Notably, in 2018, we had two big corrections which spooked investors, but as weak hands sold out of the market recovered and bounced back to make new all-time highs in the last few weeks. This means that now we're once again at a point where investors start questioning themselves and they start asking, should I buy more stock now? Should I sell my share? Should I just continue holding it and just not look at the market? What should I do? So many investors at this point may be selling. According to this, around 14% of you are selling. And maybe we see a crash in the next week or two, and who knows, you guys will look like geniuses. But what I have to say is that if you're in the stock market game for the long term, then your mindset should be a bit different from short-term or swing-term traders, and all-time highs in the market should not matter to you as much as the media wants it to matter to you. So what I've been doing personally on a monthly basis is evaluating my portfolio and looking at the PEs and forward PEs of all my positions. And I like to see myself personally as a hybrid investor. I invest in growth stocks, I also invest in dividend stocks, I also invest in dividend growth stocks. But regardless of what kind of stock it is, whether it's just a growth stock, dividend stock, doesn't matter. The one common element is that I like to see value and I like to see potential upside in that investment. As it stands today, the S&P 500 is at a PE of around 22, meaning that the average PE for the 500 largest companies in the United States is around a 22. And although this is a bit higher than I like, I still use this as a benchmark when comparing it to my portfolio. And by doing this, it helps me see which stocks in my portfolio are undervalued compared to the market, fairly valued, or overvalued when compared to the market. So my personal strategy is actually to buy stocks when they are on sale. And when I say sale, I mean two things. The first is that the stock has corrected recently. The second is that the stock is actually trading at a reasonable valuation or is undervalued currently. Even when the market is making new all-time highs, there are still stocks out there and sectors out there that are still making new all-time lows or that have recently experienced a significant correction. And those are the exact kind of stocks that I like to build my position in times like this. And once these positions are fully built out and I'm happy with the size of it, I'll just continue to hold these stocks over the long term, and from most of them, I will actually enjoy dividend income as well. Now, in my recent video, I talked about timing the market and how I believe that's a losing game. And while I still believe that this is true, I do still think that it's wise, and personally has been working for me, to go in and pick companies that are undervalued and that the market, for whatever reason, does not like right now. I think that if you stick with companies that are strong blue chip companies or well-known companies that have proven track records, and you couple that with the fact that they've experienced a significant correction recently, they've been corrected because of news or just market sentiment that has gone against it, those are the positions that I actually think will provide you massive gains over the long term than just simply buying the S&P 500 and just staying in the market regardless of what the market is doing. Now, I do understand it depends on where you're at in your investment career. If you're brand new to the market, picking stocks individually is typically not the best thing to do. The S&P 500 is most likely the best thing to do there. But if you are a more seasoned investor and you want to take the time to go in and research stocks and actually find undervalued companies, this will typically do better over the very long term than just simply buying the S&P 500. So anyways, going back to my portfolio, after I recently went over it and updated those PEs and forward PEs, I did see some stocks that were fairly undervalued, but also some that are fairly overvalued. My personal portfolio currently sits at a PE of around a 30, which is higher than the market right now. But keep in mind that I do hold high growth companies like Tesla, for example, so this does skew that average. However, when I look at my forward PEs, even when I incorporate all of these growth companies that I hold, that sits at around a 23, which is much more reasonable when compared to the market. Now, I know some value investors watching this video are not going to be very happy with these PE ratios that I personally hold in my portfolio, but really it comes down to your own personal preference. I believe that since I'm younger, I can take on more risk. I can invest some of my capital in these high growth companies and see if that plays out over the long term. But that being said, at the same time, I still have a good chunk of my portfolio set aside to safe companies, blue chip companies that I believe will actually increase in value over the long term, even though they're already so large. But even with stocks like Tesla aside, I still believe that there are some stocks that I hold which are richly valued right now in my opinion. And to these stocks, I'm just going to continue holding them. And the reason is simple. It's because when I entered these positions, I was happy with that cost basis. I was happy with that valuation. And whatever really happens with that stock now going forward, it doesn't really make a difference to me because I plan to hold it over the very long term. And how long I hold that really depends on two things. The first is if I need that money for something else, say if I wanted to buy a house, for example. Or the second is if the company fundamentals actually changed. And at that point, I'll actually go in and sell that stock if I wasn't happy with those changes. But apart from that, I'm just going to keep holding it in my portfolio until I really need to sell it. But until that, I'm just going to continue holding in my portfolio, possibly forever. So that right there should give you a pretty good idea that most of my positions are actually going to be a hold regardless of how the market is doing. But that being said, there are still some positions that I am buying on a regular basis and building up a bigger position in. Yes, even when the market is at all-time highs. There are many companies out there that I believe are at a great value. And like I said, I wait for opportunities like this for those stocks to correct, to open up a position in them or add to an existing position in them. And a stock that I believe is experiencing this today is Altria, ticker symbol MO. I believe that this stock is actually incredibly undervalued. I think that the potential moving forward for this company is extremely high. And I think that the market is just overall negative over this company and this sector right now, which is why I'm taking this opportunity to build out a good position here in this company. And once it starts recovering and moving higher, I'll stop building that out and just continue holding and enjoying those dividends. Another good example of this is Lowe's, which I talked about recently and I covered in my Dividend Kings video. And by the way, in that video, I did ask you guys to comment and guess which of those 6 Dividend Kings I personally hold. And most of you were spot on with guessing Lowe's. But anyways, Lowe's corrected to the $90 range recently, and it was a company that I did like, but I felt it was overvalued at nearly $120 before that correction. But once it hit $90 around that range, I really liked the value and I begun buying into that position. But now fast forward a few weeks, we have kind of creeped back up to $110 per share in the stock. And at these prices, I will not be buying any more Lowe's. I'll just continue holding until we see another correction in that stock, if that ever does come. Again, just because a company is overvalued right now in my eyes does not mean that that company will come back down in price to where I want it to be. And I completely accept that and I'm completely okay with that. Because like I said, timing the market does not always work. You will most likely lose out more than you win. But in this situation here, I'm happy with that position that I built out in Lowe's. And if I do get another opportunity, I'll take advantage of that. But if I don't, completely fine with that as well. I'm not going to sit here and pretend like I know that the company is going to drop in value again and I'm waiting for that entry point, because that may never come. And Lowe's isn't the only company this has happened with. There are other positions that I've opened in 2019 with stocks that have corrected and I've taken advantage of that. And if you're in my VIP group, you'll know all about this. You can see every single position that I own and the percentage of the portfolio that it actually takes up. So if you're interested in checking that out and joining, the link is in the description down below. So now you know my thought process right now on buying stocks. You know my thought process on holding stocks. So what is my thought process on selling stocks? So one thing that I have learned about myself recently and that I have changed is that I don't necessarily short-term trade anymore. There are opportunities where I enter a position and the stock price goes up significantly and maybe it was a speculative play and I'm looking to sell at that position. But for the most part, most of my investments, especially in my long-term portfolio, are exactly that, long-term investments. So will I be selling right now at market all-time highs? Not quite. Unless we see some insane run up in the next few months or weeks or whatever it is, where my stocks double in value and the PEs double or triple in value or something crazy like that happens where it mimics the bubble of 2000, I will be staying put and continue holding these stocks while enjoying a dividend from a lot of these positions. So guys, the one thing I want to drill home here is that just because the market is at all-time highs, it does not mean that it's time to go sell your shares. And in fact, like I said, there are still going to be some deals out there which you can actually still take advantage of. I personally continue to buy stocks regardless of the market conditions, whether the market's correcting, whether the market's making new all-time highs. If I see value out there and I see an opportunity, I take advantage of it. If the market corrects, I get an even better deal on these stocks. But if the market continues moving higher, that's fine. There are still going to be some stocks out there that are still heavily discounted. So let me know in the comment section down below if your strategy is similar to mine. I'd love to hear in more detail what you guys think about market all-time highs right now. And as per the poll, since most of you said you were holding, let me know what market condition would make you change that. If we see a correction, would you be buying more? If we continue moving higher, you're going to start buying more then? Let me know in the comment section down below. Thank you so much for watching, guys. Drop a huge like to show support on this channel. I truly appreciate each and every one of you. Hope you found value in this video, and don't forget to invest positively. Peace.